Hello everyone, welcome to my video forecast on the Euro USD and the DXY. Okay, so I'm going to start by looking at my gross profit up to date so that you have a clue of how my trading is going. So here, if you look on the top left corner, I have this indication here, gross profit at 1,002.43. On this side here, I have a gross loss at minus 9.45, and then if you check the difference between the two, it's 229 and 30 cents. So it's $229.30 in profit. Here I have commissions at 69, but this was from my previous trading where I was day trading, but not anymore. Now I'm swing trading the dollar index, and there I don't have to pay commission and interest rates. On the top right corner here, I have max drawdown at 6.67%. This is the most loss I've taken on a single trade. And then you can check my profit factor is at 1.3. My recovery factor is at 1.8. So it means if I lose a trade or if I have some losing trades, when I recover at 1.8. So I make up what I lost plus 80% of that. My profit factor means for every trade I take, I risk 1, I stand to make 1.3 on average. Now let's look at my growth. I'll start here. So the green line will represent my growth. So you can see here it's indicated at 44.42%. And then my drawdown collectively is at 16.49%. Now if you check the green line, you'll see 44.42. This represents my current growth, and then I'll also show you my balance. Okay, so this is my balance. On 2023, on 2023, on the 11th, or rather the 11th month, on the 23rd, I made a deposit of around $526. I started trading that. You can see I had winning trades, some losing trades, but either way, between those winning and losing trades, my account started growing bit by bit up until the current day, where my balance is at $746. All right, with that out of the way, I'm going to start with our forecast. I'll start with the dollar, rather the Euro USD. Okay, so if you consider price action on a weekly time frame, you'll notice something. Okay, let me do this. So on a weekly time frame, you can see price was bullish, and then there was a pullback, and then it started moving up. But on this candlestick here, 4 weeks prior, you can see that there was a loss in momentum. You know, the bullish, the move up started here actually. Price went up, then there was a pullback. It continued going up until the present week here. So 4 weeks prior, you can see this is where we saw the first weakness. Although this was still part of the move up. So price dropped a bit and then it started moving up. Now currently, price pushed all the way up until this high level here. It broke above it, but it then pulled back. Now, if anything, if you consider this weekly candlestick, you can see this forms a bearish pin bar on a weekly time frame. So you can rest assured that on a weekly time frame, price has a higher probability of moving down, you know. Let's look at the daily time frame to get a better view of this. This is part of the the move on the weekly time frame, but now we're looking at this on a daily time frame. Now price pushed up and it's now dropping, but now if you consider the daily time frame, you'll see price is finding support on this key June. But I'd like to think that this is only going to be short term, you know, because on the weekly time frame price is dropping. So during the week or next week, we are likely to see price push a little bit up. But then in the long run, I think between this week and next week, price is definitely going to continue dropping. All right, let's look at the dollar index. Okay, I'd like to start with the weekly time frame. So you can see on the dollar index price dropped, slight pullback, and then continued to drop. Now the price action is pretty clear here on the weekly time frame, and the dollar index is the opposite of the Euro USD, or the inverse of the Euro USD. So here we have a bullish pin bar, which shows you that price dropped last week, found some support. While it tested the support level, continued dropping. But if you combine it with this price level here, this support level, price broke below this level and then pulled up. Now this is obviously indicative of a high probability bullish move on the weekly time frame. Now let's look at the daily time frame. You can see on Monday, price pushed down, dropped, pulled back, and then you had this reversal candlestick. These two patterns formed a reversal candlestick, or rather candlestick pattern, and then price started moving up. On the last day, on Friday, price started moving back down, and this, there might be a couple of reasons why, but we'll try and figure out here. Let's look at the 12-hour time frame. You can see price pushed back, dropped, but it also had something to do, in my opinion, with this level here. If you look at this gap, there was high, selling pressure. Price pushed up, dropped a bit, and then pushed past this gap, found resistance, and then started dropping. Now let's look at the 8-hour time frame and see if we can see anything there. Now on the 8-hour time frame, it's becoming clear. I want to indicate this here, that price pushed up, found resistance, started dropping, but now look at this level here. You can see that the last 8-hour candlestick obviously dropped to this support level. So it touched that level and then started reversing up, which indicates that there's a higher probability for price to continue moving up. Now this is obviously, this view is based on the idea that on the weekly time frame we have a bullish pin bar. All right, so that's the end of the forecast. I'm bullish. I have an actual open trade here, and this is on the 4-hour time frame. This is a live account. I opened this trade on Friday, I think. Let me just show you here. Okay, so you can see this is my actual account. Stop loss, entry. I'm currently in a I would say running at a loss on this trade, and then this is my take profit. So this indicates FX Pro MT5 Live second account. This is a hedging account. The first one was not hedging, and then I covered my account number there because I don't want any difficulties. This is the same account, so this is the balance, whatever. Okay, see you on the next forecast.